Jenna Wright, the Managing Director of LMAX Digital. We are a DLT provider here in Gibraltar, regulated by the FSC. Our background, we're from TradFi. We've operated exchanges in foreign exchange for the last 13 years. Out of London, FCA-regulated entities, an MTF and a broker. We moved into crypto in 2018. We had a bunch of non-bank, high-frequency type market-making clients who trade foreign exchange with us, asking if we could do what we do on the FX side of the business in crypto. So they were market-making on a ton of retail exchanges in crypto, starting to take big positions, but didn't feel that they had the reliability of institutional-grade infrastructure. So it was very much the fact in 2017 when they approached us that a retail crypto exchange could just go down for a day or two or a few hours, but obviously that doesn't work for institutional counterparties. So they really asked us if we could simply migrate or use what we've used for the last 8-9 years at that point and produce something for them in the crypto space, which actually when we looked at it, Bitcoin dollar, Ethereum dollar, it very much looks like dollar yen and euro dollar. We couldn't really see too much different in terms of the trading side of things. So we spun up an exchange. It was our 5th exchange at the time. Spot crypto, looked around for regulation. As a group, we're very heavily regulated. We take great comfort in regulation, and we ended up in Gibraltar because for us at the time, it was where the framework was. It looked and felt very similar to what we were used to. So we set up here, we built a team, and we continue to grow that team here, and we're very comfortable with the framework and the policy. So that's us without going on too much in a nutshell. One thing to add, we took a slight different approach. Our clients are our clients will face the end users, the retail clients. We don't partake in that activity. We're just there with institutional grade infrastructure to allow the larger institutional clients to participate on our venue and to trade with each other. So we don't do retail. We have a smaller number of clients that trade significant volumes, and that's really the model that we will continue to operate. It really, for us, is about institutional counterparties entering the space from now on. That's what we need to see and what we're working towards.
Fantastic. Samuel, also representing a sponsor, give us the scoop.
Hello, everyone. I'm from Wincent, which is a company founded in 2017 that is essentially a high-frequency trading firm. What we do and focus on is providing liquidity to the market. So if you go to the exchange and want to buy or sell your Bitcoin, we are there to be your counterparty for that, providing liquidity. Now, given that this is very capital intensive, we have set up the structure as a hedge fund here in Gibraltar. And right now we are also opening a very small investment round. So if you are interested in putting some money in, you can talk to my team later. Nevertheless, besides exchanges, we are also a relevant partner for big institutions when they want to execute their trades in an efficient manner. Because when you want to buy or sell a large amount of crypto, it's not really the best idea to go directly to the exchange.
Now, just to follow up on that point for the audience, the reason it's not a good idea is?
The reason it's not a good idea is that you will move the market price too much.
So slippage?
Yes, slippage.
Right, so you're
LMAX Digital, where we cater for exactly that trading type, a little bit different to the retail exchanges.
Right. Okay, fantastic. Thank you for the backgrounds. So let's dive right into this crazy market we've been experiencing. Last time we met, I guess it was still, are we in crypto winter? Was it a bull market last year, and is it bear market now? What would you say is happening? What's going on?
Yeah. So 2021 was huge. as a group, 40% of our revenues were crypto, so we all thought we were going to the moon with Bitcoin. And then this year happened, and I'd say Q1 was incredibly flat. There wasn't really much movement at all, and if the markets don't move, you don't really make any money, and you don't print volume, which is, we're all trying to grow our market share and obtain as much of the flow as we can. And then Q2 happened, and that was really catastrophic in the crypto space. So the Terra Luna debacle, followed by 3AC, took Bitcoin to lows that we haven't seen for a while. It was very clear to us that there was a lack of risk management within the ecosystem. And I think we come from the traditional world, so we kind of understand that robust policies are essential and risk management's key. But a lot of firms were operating in the space without that. But it's just not sustainable to think that the market can only go up, which is where firms were getting themselves, right? Leveraging on credit and then leveraging again, because Bitcoin was definitely going up. And that's how we ended up where we are today. So yeah, I would say we're definitely in a crypto winter. We don't know how long we're going to be here. But I mean, would you say the same?
I would say, especially with the Fed rates increasing, all the speculative assets are going to be hurt a lot, right? So yeah, I agree.
It's also not crypto specific. Sorry,
Right.
It's not crypto specific, right? We're in a financial services global turmoil.
Well, actually, let me ask you: is the downfall in crypto just related to the general economic fear and malaise, or is it related to something unique in the industry, or is it a regulatory Luna risk?
I think it's a combination of both, because Terra Luna may have triggered 3AC, right? But then everything else that's happening, inflationary pressures, hiked interest rates, I definitely think it's a combination of the both. And then you have the regulatory issue, which I think what we've seen in Q2 in crypto will help this along. There are different jurisdictions now that are feeling governmental pressures, and we're going to have to see more frameworks across the globe. And we're starting to see that already. So as bad as terrible as it's been for my clients and peers to be in this situation where people are losing their jobs and firms are perhaps no longer going to be around, it's almost weeding out some of the rubbish. And I think the regulators are going to step up now. And for me, our goal is the institutional space, to see the large names enter, real money, not market caps that we see today, because it's really very small, right? We're talking about an asset class that's actually tiny relative to others. For real money to enter, I think the top 3 custodians have $200 trillion assets under custody. If we were to see a 5% allocation, we're talking about 10xing the market cap today at current numbers. I mean,
from your mouth to God's ears. Hopefully that happens, and you can lead to that. I think what you're saying is that when there's more comfort in the market, more structure, more regulation, that's when the institutions come in, which can make this into a truly substantial asset class. Are you seeing that interest? Are you seeing that pressure, or has that eased up a little bit?
2 client types. The banks are a little bit penciled down. Let's let the market start rallying again. Institutions actually are taking great comfort that the firms that survived, the firms that did it properly, suddenly, from my experiences, I may have been, so Wincent will be a perfect client of ours. I may have been 10th in their queue for exchange integration, but now I might go to number 2 because I'm still around and I did it properly. Some of the offshore exchanges without regulation might not be in that position. So I think I think institutions are taking great comfort that more people are going to start following the processes they're used to. regulation is always key. Credit mechanisms, so what you said earlier about capital inefficiency, that's a real problem, right?
Yeah.
If you're a market maker, you have to fund 25 exchanges to make a market on 25 exchanges. How are you going to do that? It's tough.
By raising lots of money.
Is it doable, or do we go to automatic market makers?
Sorry?
Is it doable?
Yes, it's doable. You just need the money for that. And it's inefficient, that's true. In the traditional world, you can actually have these brokers who can solve this for you, so you can net positions across exchanges. In the crypto world, this is becoming emerging, but most of the firms are not really using those. So yes, right now you need much more capital to achieve the same, which leads to higher inefficiencies in crypto.
I'm sorry, leads to? Just repeat the very last part you said.
Yeah, so there are right now much higher inefficiencies in crypto world than in traditional finance.
Okay. So is it a question of more money, or is it a question of more developed infrastructure and efficiencies making that money do the job it's supposed to?
The latter, I would say, because right now, if I have a short position on one exchange and a long position on the other exchange, I can't really net these two positions because those exchanges don't trust each other.
So, okay, let me put it this way. Is that a business model challenge or a technical cross-chain challenge?
Both.
Okay. I put it as or, but like most things in life, it's and.
Well, it's the ecosystem, right? Because in foreign exchange, we have prime brokerage model, and most of the banks and a couple of non-banks perform that role as clearers. And we can't get the banks to do anything yet because of the regulation. So it's a knock-on effect of the ecosystem. Sure. We have to build this ecosystem, and if ever there's a time to build, it has to be right now because, by the way, we're not doing much else, right? The volumes are off. They're nowhere close to what they were last year. And as a result of the Bitcoin price, we earn our revenues based on the price of Bitcoin. So guess what, guys? We earn less money too, as well as not doing enough.
What was Bitcoin this morning? Was it 19,000, 18,000?
19.2.
Anyone check? Okay.
19.2.
Now, I'm going to totally change the subject. 1 year from now, what do you think it will be?
1 year is quite a short period of time. It's still a lot more.
Not end of year, but 1 year from now.
I think we're going to see a lot more around regulation in the next 12 months.
I'm putting you right on the spot. What do you think Bitcoin will be in a year?
This
is not investment advice.
Higher than $19,200.
Higher than?
Where it is right now.
That's a very, I can tell.
No, I don't have the number.
You are a hedge fund in your mind. Yes?
We'll be higher, for sure.
Fair enough.
I don't think we're at these.
And I don't care.
I know you don't care, but I care.
Yeah, well, if you want to buy, I'll sell you. If you want to sell,
you are a
I'll
market
buy.
maker.
I'm a market maker. I don't care what the price will be.
Okay, that's a good answer. So one thing you mentioned earlier, just changing a little bit, is yes, we're in sort of a bear market. Yes, things are kind of stalled out, but that a huge amount of the population hasn't yet invested, hasn't yet entered into this market. At one point you raised earlier was that you wanted to talk about how to bring people into the market, whether it's consumers or institutions. What do you see as the playbook in 22 and 23 for bringing in new participants?
Okay, that's a very good question. And it's also, I would say, ethical question, because there are definitely worthy projects in crypto. I mean, I personally own Bitcoin, to be honest. So
you do care?
A little bit, yeah.
Aw, you care a little bit. Okay.
But the problem is that, as with every emerging industry, there is lots of scam. It's like 2000 and dot-com bubble. And one thing that is interesting about crypto is that, with .com it was pretty much one big wave. With crypto, you always have a big bubble, and then it pops, and then you have another big bubble, and then it pops, and it's always something new. First, it was all those shitcoins. Then people understood that those coins are not really great. Then they came up with.
I think we have some innocents in the audience. Who's heard of the shit coins? Raise your hands. Okay, good. Just checking. Otherwise known as altcoins, if you like them. But go ahead. Take the bait. It's okay.
It might be insulting for some of the altcoins, but then NFTs came, and play to earn, and many things that are kind of building out of thin air. So I would advise everyone to, yes, get into crypto, but be extremely careful and try to understand where the substance actually is. Don't just buy a coin because there is some coin of the week on Twitter where some guy posts that this is definitely the coin you should own. Do some research, understand the fundamentals.
Or there's always DYOR, do your own research.
Yes.
But let me be a little bit difficult and say, if everyone did do your own research on regular investments, we'd have a much smaller investing public. To a certain extent, they're trusting their asset managers or their institutions or their brokers or their wealth planners to do it. Is that something you can't do in crypto?
It's much harder because I can't really tell you whom to trust and whom not, because there are so many good players and bad players, and it's really hard to understand who is who without really going deep into details.
Okay. So let me bring it back to Jenna and LMAX. Are you advising your institutional clients on what to invest in, or providing the platform for them to invest, or where's the line?
Yeah, no advisory services, purely the execution venue. And actually, we couldn't advise the likes of these guys. They're Wincent are a market maker, pretty market neutral, I imagine, don't take risk. And it's all algorithmic, so there wouldn't be much in it for us to do that. For me, what I'm seeing is what we're all seeing publicly. When you hear about Brevin Howard, digital assets, that's fantastic, but there is a little bit of, is this PR? Because you don't see too much else around it. But if you think about the last few months, we've seen BlackRock teaming up with Coinbase to allow their users of Aladdin to access crypto. You've seen a deal between Aberdeen and Archax.
Yes.
This week maybe, NASDAQ entering the space, looking at custody first. That's what's been missing for the institutional piece. So Brevin last year was great, but we needed more of that. We're now seeing really big names, really real money. And I think that for us, for all of us, is how we move this market from $1 trillion market cap to 10 or 20 and for it to become even bigger. It's still so nascent. But I get very excited, even though they didn't do the deal with me, to see BlackRock. That's huge, right? That is what we want, the institutionalization of crypto and digital assets.
100%. And one thing you mentioned earlier is LMAX takes a certain approach to risk management and counterparty risk. Can you go into a little bit more detail about what specifically institutions need, maybe in a fine-grained manner, in order to come in?
Yeah, so I think for us, the two key challenges, regulation, it's always at the top of the list, but that credit mechanism that we spoke about, if counterparties don't, and it's the banks, it's the institutions, it's the high-frequency traders, if they don't have the credit setup like that they're used to, it becomes really impossible for them to get stuck in and to trade crypto to their full capabilities. So what we need is ABN clearing and Barclays and all these clearers to make a move into the market. And we're seeing a little bit of around firms offering prime services, but true prime brokerage or true clearing and CCP models are based on balance sheet, essentially. And if you don't have a balance sheet, you can't perform that. So we really need the bigger players, the tier one banks, to come in and provide that service. The piece that we're just stepping into, which we haven't done before actually, is futures, crypto futures that are cash settled. So we're doing that out of the UK. It's separate to LMAX Digital, the spot venue here. But it's cash settled. And that for us might be an interim whilst this ecosystem's building, because it takes time. Things don't happen overnight. Why regulation is getting some clarity, whilst credit mechanisms, banks are deciding if they're going to clear this product or not, offering bank clients and institutions the ability to get exposure to crypto via their regular mechanisms that they would trade other asset classes. It's almost like you're giving them some comfort in the space.
Sure.
So the CME today really is the grown-up crypto futures offering. We're doing a European version of that will be traded 24/7, cash settled. Get these guys on board trading some level of crypto, albeit not physical, so that when in the next few years, whenever it happens, that they get the green light to properly trade crypto and not just have exposure to it. They understand crypto, they understand the market, how it moves. Actually looks quite similar to foreign exchange, so they know it anyway. It's normally the FX desks that trade it. It's getting them engaged, because my scenario today is I have 35 banks that trade FX that can't trade on LMAX Digital. So what do we do in the meantime to get them comfortable? Let's get them started. Let's show them the LMAX Digital market data. Let's give them a cash settled product. Let's start engaging these bigger clients until they can trade the spot.
And do you think the traffic or orders will rise organically as they gain comfort, or is it one of those things where you're laying the groundwork, we're going to switch into a bull market, and then they're all going to pile in? If you had to guess.
I don't know. I actually don't know the answer. I think you've got to build the right product for them to have the opportunity to be able to trade when the bull market kicks off again. And that's what we're working towards.
I mean, just to your point, there's euphoria and desperation in crypto in these waves. It's sort of, there's no earnings on crypto. It's like you can't look at price-earning ratios mostly.
Yeah.
You're kind of, the question, you have this sort of blind price discovery that seems very psychological. I don't know, maybe you can just comment on that.
Yeah, I mean, okay, so crypto is trying to become money. That's the vision.
I gotta jump in, I gotta ask, crypto is or certain coins are?
Okay, so let's put it this way, certain coins are. That's the very basic, that's the bottom layer, that's the beginnings of the crypto, Bitcoin. Now, money, by its very definition, is bubble. Money doesn't yield dividends. If you have money, you are actually usually, with fiat money, losing value every day. And yet, people believe in the value of money and hold it. The reason is that money gives you ability to buy things. So when Bitcoin is aspiring for something similar, it's completely okay and natural that its price is pretty much speculative, because as you said, you don't have earnings, or you can't do discounted cash flow or something like that. Now, the problem is, in crypto, that while this is justifiable for some assets like Bitcoin, this is not a generally good approach to evaluate just any asset. And because of sheer success of Bitcoin with this model, it seems that everybody is hoping for the same. I'm going to create something that has no meaning, no sense, but I'll say it's crypto and it will go to the moon and people will buy it. And with all the handouts that were to the people during the pandemics, especially in the US. We've seen what happened with GameStop. Suddenly, company with no value went up 100x times. Why? Well, if it can happen with crypto, why not with GameStop, right? People are buying and selling stocks and other assets just by, coordinating on Reddit. So the market
Isn't that amazing, though?
It's amazing.
I was so enthralled when that was happening.
And you can make lots of money in those situations too. So in a way, it's amazing, but in the other way, it's kind of sad because in the end...
Well, it was sad for the hedge funds that got squeezed out.
Well, lots of people lost money there.
Sure.
So, yes, it's always lots of fun to trade against the irrational mob. But if you empathize with those people, it's actually sad. So,
fair enough.
It's better if people behave rationally for themselves.
Got it. So we have the final minute of this great opening panel. If you want to leave the audience with a thought to mull over or a perspective or just something, go for it. I know you do. Give us a word of wisdom.
Put me under pressure. Look, from our side, we really want to see this market take off. So everyone needs to get behind it. Globally, I think jurisdictions need to learn a thing or two from what we see here in Gibraltar. That would be good, because we do need the jurisdictions to align to some degree. And let's open up the market to real money. Let's 10, 20x that market cap.
Let's 10 or 20x market cap. I like that.
Okay, my word of wisdom, as you said, is if you are promised some amazing returns or something, and you don't really understand where that's coming from, and like truly coming from, because somebody needs to pay for that, then just don't buy it, and rather buy some Bitcoin, Ethereum, and hold.
Fair enough. So be an educated consumer of crypto and take responsibility for your own education and your own investment decisions, and don't go where the wind is necessarily blowing. And maintain awareness.
But I mean, don't buy these stories of there is some algorithmic stablecoin and it will somehow create yield. No. If you don't understand who's paying for that, then it's probably shenanigans.
Fantastic. Okay, let's give a big round of applause, please, to our opening panel. Thank you. Good job.